Hello. It's me, and I'm back. Kenny Bulgari, your host of the party, and this is today's morning market video. It is Wednesday, October 6th, and what is happening today? Well, stocks rallied. Notice the past tense. They rallied on Tuesday after the beating they took on Monday because stocks are in decline around the world this morning. Volatility remains elevated as earnings season is set to begin. The dollar index moves up, 10-year treasury yields are up, oil is up, and Pepsi is raising prices across the board. 42.78 is the level to watch on the S&P. Where are the dippers? And what are we having for dinner tonight? We're going to have the Penne Arrabiata. Oh my God, it's so good. But we'll get to that at the end, right? Okay, so, well. Stocks rallied back on Tuesday after the beating they took on Monday and what felt much more like a knee-jerk reaction to the sell-off, right? Analysts and strategists telling investors that it's all good. Don't worry, buy the dip. The NASDAQ, which fell more than 2% on Monday, rallied back, gaining 180 points yesterday, or 1.7%. But it was the transports that sold the day, rising 251 points to 1.8%. The Dow and S&P both rallied 1%. The Russell was the only laggard, gaining 11 points or 0.5%. Which was interesting kind of to see that action. The recent volatility, though, should not be a surprise to anybody. How long have we been talking about the seasonal weakness, also known as seasonal volatility? Look, while the volatility has been somewhat modest overall, the S&P is only off 5% from the high, the NASDAQ's down 6.5%, the Dow's off 4%, the Russell's down 5%, all within normal trading ranges. The transports are down 8%. Still within the normal trading range, all off their summer highs. Individual names, though, have told a different story, specifically in the tech sector. We've seen much more repricing, right? So think Amazon down 15%, Apple down 10%, Microsoft down 7%, Intel down 21%. And tech disruptors are down even more. Coinbase down 18%, Shopify 22%, ARK down 32%. That's the tech disruptor ETF. All as investors reposition their portfolios as we move into what's going to be a new era of less stimulus, rising rates, rising inflation, massive tax and spend plans in D.C., and now a Democratic proposal to force American banks to report every transaction in your bank account greater than $600 in and out of your account. Reported to the IRS in an attempt to find anyone who's not paying their fair share. Oh boy. And what makes this even more unbelievable is that Treasury Secretary Janet Yellen is supporting this asinine proposal. Think about this. Every $600 transaction, can you begin to imagine what that looks like? Grocery shopping is $600. Your car payment is $600. If you buy 2 pairs of jeans and 3 shirts, it's $600. If you buy 2 pairs of shoes, it's $600. And if you sell your old couch on Facebook Marketplace or Poshmark or eBay and deposit $600 in your account, the IRS is going to want a piece of that too. I mean, just think about this. And we elected these people. It's really beyond me. Okay, so let's get back to the market before I have a nervous breakdown. Investors say are more worried about the prospects of rising inflation and rising interest rates and the effect that that's going to have on the U.S. and global economy. Watch the bond market. Right? The 10-year yield is going to tell you where inflation is headed. And yesterday it closed at 1.528%. That's up from 1.48% on Monday and up from 1.2% a month ago. Expectations are for yields to end the year around 1.8%, with some estimates even as high as 2%. Thus, the explanation about why tech is getting punched in the face, because higher yields affect the price that investors are willing to pay for future profits. And tech is all about future profits. Higher yields also are a reason for investors to move money out of the stock market, put it in the bond market, especially if you're worried about a correction. By the way, a correction that's going to come because rates are moving up. Recall that as rates fell to zero, money moved out of bonds and into the stock market because they had to go somewhere else to find some yield. But when yields start to rise, the opposite is then true. Money will come out of stocks and go into the bond market. Thus, they'll have pressure on prices. Mortgage rates are also on the rise, right? 30-year money is now at 3.15%. That's up from 2.75% only a month ago. And the prospects for higher mortgage rates by year-end 2022. The industry is suggesting that by June of 2022, 30-year money is going to be 3.5%. And by the end of 2022, you can expect to pay nearly 4% on 30-year mortgages, which should mean that the ongoing rise in housing prices is going to have to slow down, if not go into reverse. And if rates continue to go higher in 2023, then just watch how fast housing is going to adjust. Meanwhile, oil continues to surge higher. And that also threatens to weigh in on companies' earnings as well as the consumer. Yesterday, West Texas Intermediate rose another 1.7% to end the day at nearly $79 a barrel. Oil is now up 30% just since August, never mind since January. But don't worry, winter's coming and some are predicting we could see an off-the-chart spike in oil, suggesting $100 a barrel is not out of the question. And if that's true, that would be up another 25% from where we are today. And just think about what that's going to do to your winter heating bill, never mind what it's going to do to the gas pump. Remember in August when the talking heads were telling us that COVID-19 and the Delta variant were going to destroy demand for oil, and oh my God, well, how's that working out, right? They talked it all the way down to 65. It's now trading at 80. And this morning, stocks around the world are under pressure. Asian stocks ended the day lower by about 0.5%. But European indexes are down more than 2% this morning, and U.S. futures are weaker as well. Dow futures off more than 350 points or 1.1%. The S&P is down 53 or 1.2%. The Nasdaq's down 210 points or 1.4%, while the Russell is down about 34 points, suggesting a 1.5% move lower. The VIX, which fell yesterday by 7%, is up 12% this morning on this news. As the selling continues, gold is down $12. The dollar index is up 44 cents at 94.42 and is about to pierce 94.67, that level I identified yesterday. And if the dollar breaks up and through that, then look for the rally to continue to 98 before the dollar tires. And if yields continue to move higher on the 10-year, then expect the dollar index to follow suit even more. And that's going to put more pressure on the multinationals. Because when they report their foreign earnings and have to convert those foreign currencies into U.S. dollars, they're going to get less U.S. dollars, right? Just FYI, that's just a math problem. It's how it works. I do not expect the recent volatility to subside anytime soon. And I expect more turbulence in the weeks ahead. Because as we're about to enter the danger zone, which is the reporting season, so much is out there that we all have questions about, right? So will it be what so many expect, or we're going to hear more supply chain issues, rising input prices, and pressure on margins? Yes, yes, and yes. Analysts have already made downward revisions to estimates. The question is, have they cut them so much that they're all going to look better than the expectation? Which is the trick, right? It's always better than the expectation to try to paint the positive. Yesterday, Pepsi reported and beat the number, right? They beat by about 6 cents. The stock rose by 0.6%. They also reported, guess what? That input prices are on the rise, but yet they have pricing power and they expect to raise prices across the board to reflect that changing environment. And those price increases are going to take place today and next week across a range of their products. I suspect we're going to hear more and more of that about companies raising prices to offset increased costs. So expect the inflation story to remain alive and well. Eco data today includes ADP employment expectations of plus 430,000 new jobs. But like I said yesterday, I suspect we're going to see an upside surprise. It's just my gut. Just feels like, it's going to happen. We're going to get this upside surprise today and then again on Friday with the NFP report. Bitcoin this morning is trading at 51,300, which is up, and Ethereum is trading at 3380, which is just about where that was trading yesterday. The S&P ended the day at 43.45. After a 60-point swing from high to low, it closed just below the trend line. And again, this is an issue technically, right? And with earnings coming formally next week, it's time to brace yourself for what I think is going to be more downside surprises. And if futures are any guide, the S&P looks like it's going to open below 4,300 this morning. So here's the number to keep your eye on, 42.78, which is the Monday low. Are the buy the dippers sitting there and waiting? If not, maybe they'll be at 42.50. Recall the long-term support is way down at 41.45 or down another 4.5% from here. And if it goes there, the S&P would be down 9.5% from the high, a level I've been targeting for months now, like just below a 10% correction. So if we get there, maybe my year-end target of 4,400 is right. I still think the path of least resistance is lower in the weeks ahead, but that's going to provide better long-term opportunities for the patient investor. So just sit tight. Not going anywhere. Remember, you can text the word invest to 21,000 on your cell phone to get my digital business card. Feel free to download it, send me off an email or a text, give me a call. I'm always happy to engage and talk markets and planning and thoughts, concerns, ideas, anything that's on your mind. I'm always happy to discuss it. And you can follow me on Twitter and TikTok at Kenny Polcari, which is my handle, and on my Instagram, which is KennyP1961. So, this is so good. What are we having for dinner tonight? Well, considering the markets are angry, the arrabbiata sauce comes right to mind again. This one is a pork arrabbiata, right? So you're going to make a pork chop, put it in the arrabbiata sauce and eat it. Now, you can always serve it with a side of pasta if you want, but it's really simple, right? It's simple to make, it's easy to make, and it is so good. So what do you need for this, right? Well, first of all, like I said, arrabbiata means rage, right? Means angry, appropriate, certainly for the last couple of weeks, I would say, never mind the last couple of days, right? And the good thing about this sauce is you can really use it on a bunch of things. You can make linguine arrabbiata, steak arrabbiata, pork, lamb, even chicken, right? Penne Arrabiata is a classic pasta dish, and you can find it almost on any menu in a southern Italian restaurant. So you got to begin with the basic marinara sauce, right? You need plum tomatoes, garlic, onions, grated carrots and grated celery, fresh basil, a pinch of sugar, and salt and pepper. Because that's the basic ingredients for a classic marinara. You want to add some olive oil to a saute pan. You want to take the side of the knife, smash the garlic, and then chop it, add it to the pan, and saute it with the sliced onion or the diced onion, however you make it. Saute it for 10 or 15 minutes. Heat is on medium. Don't let it burn the onions or the garlic, right? You just want to keep sauteing it. The onions will get soft and translucent. You know how this works, right? Next, you're going to add the shredded carrots and the celery, maybe 2 of each, right? 2 carrots and 2 stalks of celery, and continue to saute for another 15 minutes or so that the veggies get soft and they'll begin to melt away, right? The shredded ones will just melt away. Now you're going to add the plum tomatoes. Now, if you want a chunky sauce, then take the plum tomatoes and hand crush them and add them to the pot. If you want a smoother sauce, then run them through the food processor, blend them, and then pour that into the sauce, right? Once you add it to the pot, season it with the fresh basil, salt and pepper, and a pinch of sugar. I think this is more psychological, but my grandmother did it, so just do it, right? Bring to a boil, then reduce it to simmer, stir and cover it, returning to stir it occasionally every 10 minutes or so. Just go there and stir it to make sure that, that you stir, right? It's going to simmer on the stove for about 30 minutes or so, and then it's done. Now, the arrabbiata part of this, right? You're going to need pancetta, crushed red pepper, garlic, and olive oil. You always need more garlic. I mean, how can you never... You can never have enough garlic as far as I'm concerned. In a large saute pan, you want to add some more olive oil, separate pan. Add the smashed and chopped garlic and then saute it. Now add the pancetta and continue to saute for 5 minutes or so. Now you're going to introduce the red pepper flakes. The more you add, the angrier it gets, right? That's the whole thing about arrabbiata. It's angry. Then you're going to take the marinara sauce that you made in the other dish, and you're going to mix it now with the pancetta and the red pepper flakes, right? Now, if you're making the pork, you want to season the pork chop with salt and pepper, and then you're going to light your grill, get it nice and hot. You're going to place the pork chop on the grill. You're going to cook it 3 minutes per side, depending on the thickness of the pork chop, 3 or 4 minutes. And then you're going to take it off the grill, and you're going to put it right in the arrabbiata sauce on the stove. And you're going to mix it up. You're going to cover it with the sauce. You're going to let it simmer there for 5 to 10 minutes. When ready, you want to serve the chop and then take a spoon and put some of the arrabbiata sauce over the chop. You can also serve this with a side of pasta, like I said, spaghetti, linguine. Just cook it up. Serve the same sauce with the pasta. It's always good. It is always so good. Anyway, for this, I would serve a more robust red wine, right? I wouldn't go with the Pinot Noir or the Chianti. I'd go with something a little bit more robust because this recipe calls for it, right? Because it's angry. First of all, it's meat, right? It's pork, and it's kind of a thick tomato sauce, which is angry. So you want something a little bit more robust. So for this one, I might actually do the Brunello di Montalcino because not only do I like it, but I think it's like velvet and it works well. In any event, the day is getting started. You can see the sun is up. It's going to be another beautiful day here in South Florida. Until tomorrow, take good care.